Hey everyone, and welcome back to Capital Markets Quickie. Today is Monday, October 7th. I'm your host, Endrit Çela, and today we're here to talk about what's ahead for the markets this week. We've got a lot to cover: U.S. inflation data, the Fed minutes, and the kickoff to earnings season. So, let's dive right in. Before we get started, just a quick reminder. Today's episode is brought to you by AMF Capital Asset Management Frankfurt. They're your go-to provider for personalized investment solutions and mutual funds. For more details, visit amf-capital.de. All right, let's start with U.S. inflation data. On Thursday, we'll get the Consumer Price Index report for September, and it's going to be a big one. After last Friday's stronger-than-expected jobs report, investors are keen to see if inflation continues to cool off. If it does, the Fed will likely feel confident that inflation is trending back toward their 2% target, which is exactly what they want to see. Now, last month, the Fed made a hefty 50 basis point rate cut, and Friday's jobs data suggests they won't be rushing to do another big cut in November. But if Thursday's inflation numbers surprise us, if prices are rising faster than expected, it could change the game a bit. We might see the Fed hold off on cutting rates further this year, or at least scale back their pace. In this environment, it's important to keep a close eye on those 10-year U.S. Treasury yields, which spiked quite a bit last week. And let's not forget, we've got producer price inflation data coming up on Friday too. So, plenty of data to keep an eye on this week. Next up, on Wednesday, the Fed is publishing the minutes from their September meeting. These minutes are always a good read if you want some extra insight into what's going on behind the scenes at the Fed. Investors will be looking for clues on how the Fed is thinking about future rate cuts. How did they come to that 50 basis point decision last month, and what factors are they weighing now? Plus, we'll hear from several Fed officials this week, so expect a lot of Fed talk in the headlines over the next few days. All right, moving on to earnings. It's that time again. U.S. third quarter earnings season is about to kick off. We've got some of the big names in banking like J.P. Morgan, Wells Fargo, and BlackRock all reporting on Friday. Bank earnings are always a good barometer for how the economy is doing, especially when it comes to loan demand and spending on big-ticket items. Investors will be watching closely to see if the Fed's recent rate cut is starting to trickle down into the real economy, maybe boosting things like auto sales or home purchases. And it's not just banks. Other major companies like PepsiCo and Delta Airlines are also reporting this week. With the Standard & Poor's 500 up 20% for the year and trading near record highs, bullish investors are hoping these earnings will justify those rich stock valuations. But with all the volatility in the markets recently, it's anyone's guess how things will play out. Finally, let's talk about oil. Prices rose sharply last week. Brent crude gained over 8%, and WTI was up over 9%. That's the biggest weekly gain we've seen in over a year. What's driving the surge? Geopolitical tensions in the Middle East. There's growing concern about a broader conflict after Israel swore to strike Iran in response to missile attacks. Now that's got analysts worried about potential disruptions in global oil supply. Iran is a key OPEC Plus member, producing about 3% of the world's oil. But here's the thing. The members have some spare production capacity, so if Iranian supplies are disrupted, other members might step in to boost output and keep prices from spiking too much. Still, it's something energy traders will be watching closely this week. And that's a wrap on today's Capital Markets Quickie. We've got inflation data, Fed minutes, earnings, and oil prices, all big stories to watch over the next few days. Thanks for tuning in, and if you found this episode helpful, don't forget to subscribe and share it with your friends. Have a great day, everyone!